Good morning, good afternoon, good evening. Nvidia results any second now. We've got a star guest waiting. We are on standby. We've got our guest waiting. Look at this. A second best day of all time. Up $13,000 today. We were up $8,000 yesterday. We have our star guest waiting online. We're about to bring you the Nvidia earnings. There he is. There's the man himself. Sensei, how are you, mate? Great to have you on the screen. Get ready for the event. There is our position. Whoa, let me just move Sensei's camera around a little bit. We're just going to tweak him. There you go. Let me just line him up a little bit. Wait, that looks better. There you go. There you go, Sensei, looking great now, mate. Spot on. All right. When you have the results, give it to me, mate. We'll bring it in, okay?
Yeah, we're waiting on standby. I'll analyze it, give it to you straight away.
Fantastic. Thank you. We could go to CNBC and Bloomberg, but why would we do that when we got Sensei who can do a better job? So that's exactly what we're going to do. We'll probably even beat them as well. So very, very exciting stuff. So let's just tweak Sensei's camera on this scene as well. There we go. We're all good. Just seconds away now. Oh, I like your little pop shield there. Just the first time I've seen it on your microphone there, Sensei. Look at that. It's all pop shield.
We're getting all professional now.
I know, it's good in it. It's good in it. Right, okay, so we're doing really good. It's exciting now. We're about to see what happens. How will it affect my overall position? Up 13 grand today. We've started trimming in crypto. It was the right thing to do. We've kept our position of Google, as I think that's the strongest position, and I was right. Am I right? Let's have a look. Yep, it's going up. It's holding up. And Robinhood, of course, we held that as well. That's going up. But I did trim my XRP. No, I haven't touched my XRP, but I have trimmed my Ethereum. You can just see it topping out there. Doesn't mean it won't carry on, of course. Nobody knows. But I've taken some profit off the table. We are ready. We're on standby. Nvidia earnings is seconds away. Sensei will bring it to us. We've got all the live feeds.
What's the duration of these
contracts? But we're going to go to Sensei first. Why?
Snowflakes is technology.
Have you got something, Sensei?
No, still on standby. Nothing has been released yet. I am watching it, ready to analyze it. We'll watch CNBC and stuff as well, but I'll give you the full analysis as soon as that comes out.
Spot on, mate.
Standby. It's going to be big numbers, biggest earnings of the season.
Absolutely right. Absolutely right. So we're just seconds away now from this. So please tap the like button if you just arrived. Consider subscribing as well. We do have the cheat sheet. We do have a few spaces left if you want our cheat sheet, how to trade Nvidia. It's not just tonight, but tomorrow, and our award-winning newsletter. It is in the chat, pinned to the top. You can take advantage of that. It's sensei.news/Trump. because we had it yesterday for the State of the Union. There it is in the chat there, 50% off. And don't forget, if you want my Discord as well, that's there. And by the way, Sensei's newsletter includes some great stuff I can show you because we're on standby waiting for the report to come in. Sensei will bring it to us. I'm seeing Nvidia move. We've got the cheat sheet, the week ahead, the portfolio challenge, morning forecast, the XRP, the community, everything you need. Tonight's cheat sheet is in there as well for Nvidia. 50% off. We have a few spaces left. Okay, back to Sensei. We are watching Nvidia. We're watching our overall portfolio as well. It's looking very, very exciting. As you can see, we are. Oh, I'm just showing in the newsletter, which is fine. I can show that. But I was going to go back to here, see how it impacts my portfolio. Up 13 grand today, just slightly off there at 12,623. Sensei is about to talk to me. We are watching Nvidia closely. Tap the like button and consider subscribing as well over on the same channel because we can go multiple broadcasts at the same time. We've got our Vaz in the analyst room. He's doing Joby Aviation earnings. You can jump in and out of the two streams. Let me give you this. He's doing a great show tonight. And he's got the biggest audience in the world on Joby Aviation. I can tell you, I've just been having a look around, and he has the biggest audience of anyone. It's a very small sector, but we have the biggest audience. We have our competitors who we love to beat, and we're beating them. We're beating everybody. We're beating everybody. It's what we do. There's Vaz. We're waiting any second now to bring you the Nvidia earnings. Any moment now. We're on standby. We've got multiple sources, but Sensei will be first. You watch. This is CNBC. You watch. That's live, but Sensei will always be first. He always is. He's on it like a car bonnet. All right. Okay. Let's get ready to rumble. Let me just I'm just going to zoom Sensei in a bit more. There we go. That's better. Looking good there, mate. All right. So just seconds away now. All we can do is wait. But we want to react quickly because I've got 25 grand that I've trimmed today to buy a good guidance and a sell. So if we get a really nice drop and a good guidance, I just might buy. But to be perfectly honest, I'm very happy with my positions. There's Vaz live on the channel as well at the same time doing his Joby Aviation earnings, and he's all suited and booted. We like to see that as well, as we all are here tonight. Fantastic. Sensei's got his nice black shirt on. We're all ready to rock and roll. So any second now. It's normally out by now. We scheduled it for 5 past. We're 7 minutes late. What does that mean? Nothing. Don't draw anything into that, but we are waiting. What we're looking for is a good guidance and a nice drop to buy in. It would have to drop a lot for me, though, because I'm very happy with my positions. This is my position. I've got Bitcoin. I've got XRP. I've got over 100 grand now in crypto, 109. I'm not looking to buy anymore, really. I'm in a very good position. I don't need to buy anymore. I'm very happy with that. My biggest position though is Google, 300 grand in Google. So, I'm very happy with that position. That's the #1 AI play in my book. And we're not in the business of losing money, and we're not going to start anytime soon. Nvidia, I've got Sensei live on the show. If you want,
I can give you a few numbers before it releases. If you like,
yes, please give me the numbers, Sensei, and I'll drop in the chat for anybody who wants the cheat sheet and the newsletter. 50% off. There's a few spaces. There's 3 spaces left, unless Sensei updates me, but I've got 3 spaces left at the moment. Sensei, carry on.
3 left.
3 left, thank you.
Yeah, so there's the revenue we're expecting. The consensus is 65.7 billion. The adjusted earnings per share, we're expecting $1.53. The non-GAAP gross margin, we're expecting around 75%. Data center revenue, we're expecting about 58 to 60 billion. Gaming revenue, we're expecting 4 billion. Automotive revenue, it's about 663 million we're expecting. That's the consensus. Anything deviating from that to a large extent will move the stock. But the forward guidance, as you mentioned, is the most important. It's what the market cares about. So I am on standby here waiting for those numbers to come up. They haven't, so I'll give you the consensus expectations for forward guidance, which is, again, what the market cares about. Q1 revenue consensus expectations for fiscal year 2027 is between 71 billion and 72 billion. Now, that's the number we're watching. We've got full year fiscal year 2027 EPS. That will be about $7.76 adjusted, and fiscal year 2027 data center revenue is about 311 billion. So that's what the consensus is. That's what we're going to be looking at, the forward guidance expectations. Let's see how much it deviates from that. That's what's going to move the price. So what I'll be doing is I'm waiting for the numbers to come out. I'll spend a few minutes analyzing them, and then I'll come back to you with those numbers. We are volatile in the pre-market, but in the post-market, but the official numbers haven't come out yet. So this is people speculating, potentially inside trading. So this isn't based off no numbers yet.
Thank you, Sensei. Appreciate that. Yeah, we're waiting. We've got multiple sources to deliver the information, and there is nothing yet, so stand by. We can see what's moving in the market. We've got Nvidia just bouncing around, not doing anything at the moment. There is my portfolio are up just under 13 grand today. Portfolio is on fire. The S&P is up 0.84, but we're up 5.19. That's no margin, folks. That's not margin, because there's no margin on my crypto, and that's the biggest moves today. It's no options either. It's just buying with conviction. That's what it does. Palantir is up today. Gold is down. We don't want to see gold going up as well. If we see the market rally and we see gold rally, then there's a big dump coming. We don't want to see that. We want to see gold going down, and we want to see the rest of the market go up if you believe the market's going to be great for the future rest of the year. Apple is up. Amazon's up.
Breaking news from Joby, Martin.
Do what? Say again, mate?
Joby Aviation has reported, and it's beat on its earnings. So that's just some quick breaking news from Joby. They have reported their earnings.
And we have 80 and 73% on
Thank you, mate.
It's a massive increase. This is good, positive news. Currently, Joby is sitting at $10.15. As you can see above me, begin operation ahead of type certification. But this will be big news.
This is Vaz on the channel at the same time. We can go multi-streams at the same time.
Because Joby don't have to wait. They don't have to wait to complete all these bars. They will get
Thank you,
provisional.
Vaz. If you want to check in and out of Vaz's stream, I'll give you the link.
Waiver.
If you're able to do
standby for Nvidia. We're waiting for them a little bit late from Nvidia. The last to report tonight. Still waiting. Nothing coming from Nvidia just yet. We will be looking for the revenue guidance, the gross margin trajectory. Blackwell revenue is going to be important. Data center customer breadth is important. China. What are they going to say about China? Right now, nothing is priced in for China. We're going to see what they say about China as well. So big number is going to be the revenue guidance and also China. Still waiting for Nvidia to report.
Thank you, Sensei. We're on standby. I'm going to switch to the Nvidia chart. Oops, a daisy. Hello, hello, hello. Come on, come on, come on. Nvidia, NVDA. That's better. Let's bring it up. Come on, come on, come on. Let's line him up. There we go. We're waiting to see. You can see it bouncing around a little bit, but it's all just speculation at the moment. We don't speculate. We don't guess. I'm looking for a good guidance, and if I see a good guidance and I see a sell-off, I just might. But I don't need to buy. I've been asked all day, will I buy? I don't really need to. I'm fully invested. I'm now in a position of reducing my balance sheet and bringing down margin on my Google. Not really looking to buy anything unless we get a big sell-off. But the guidance is like good, telling me we're going over the 200. Then I'll buy some and do a little scalp trade or whatever. But I'm not jumping out of my skin to buy tonight. And that's when you make money, when you don't have to buy. It's when you're, I got to buy. No, you don't have to buy anything. We don't have to buy anything at all. We can wait and see. So let's look at the rest of the market. We had a bit of a sell-off today in solar, but look at Enphase, still up. Nearly $50. This is good. This is because of the margins. Some other solar companies are massively down today. That's because they get crushed by the competition of Enphase. Coca-Cola, a good defensive play. We sold it at 81. We don't want it until it drops to 75. No point. We've made money time and time again. It's built my portfolio this year. Everything else looking pretty okay. Google is going to take the lead. This is going to be a $400 stock, $450 stock, way before Microsoft, way before Google goes, Nvidia goes there. Very, very happy with that. Microsoft is very expensive. I wouldn't be buying that. Meta is up. That's going to $800. Nvidia just bouncing around. We're waiting for it. Walmart going down. It's an AI play. Tilray Brands. Well, what can I say? It's an utter joke. I keep telling people. Robinhood, a great business, expensive, but going up. Great. I love it. Rocket Lab, too expensive. Plug Power, well, it's just the biggest joke on the stock market. It's Russian manipulated. I know from first-hand experience. Bitcoin topping out. You see why I traded and took some profit. XRP. I'm not selling any of that yet. Any of that at all. I'm looking for something much bigger. Remember, it will move a lot greater, faster than Bitcoin will. Ethereum, I've trimmed it, and you can see I trimmed it back here. It's been going sideways since then. Perfect trade once again. All right, so let's go back to our star guest. Sensei is here. He has his own show, of course, on the network, and every morning for the breakfast show, he has his newsletter, award-winning newsletter, the second best-selling news, number 2 in the bestseller list on Substack. A great place for financial newsletters, probably the best. He's spoken to Michael Burry, so we are very proud to have Sensei as the owner and author of that business, which we partner with here. We don't have sponsors. We rely on us to provide what we need to keep this network moving. So Sensei provides us with great information. So Nvidia just trying to go up and down a little bit, but until we know, we don't know anything. It's just guessing, and we don't guess or speculate. I've got a portfolio of way over 300 grand now. I'm not going to be guessing. I'm not going to be jumping the gun. I would rather wait and let everyone faff around and pump and dump and do what they do. And when I've digested the numbers, when Sensei breaks it down to me, then I will make an informed decision. There's no rush. Yes, you don't want to be dallying around, but you don't want to be jumping ahead with emotion because you think, oh, it's moving, I want to get in. And then all of a sudden it dumps. And we don't want to be doing that, because if we suddenly go to $220, you can bet your ass we'll be at $195 tomorrow. So you could have bought it back less than where it is right now. So don't get all excited when you see it suddenly move, unless it goes down like 10%. And if there's a good guidance and it goes down 10%, boom. Remember the famous incident when I bought 10% of Amazon. It dropped 10% in a second, and I had a limit order set. I haven't got one set for this, but if you are going to set limit orders, now would be a good idea. You might want to set a limit order if you are looking to buy. I'm not. I'm looking for a gift. If I get a gift, I'll buy. But I'm not in the queue to buy something. I'm at the shop, standing around like a beggar man out on the street with my hand out, going, give me a gift. If it gives me a gift, I'll have it. But I'm not in the queue to buy. I'm the beggar outside going, I'll pick up the scraps when you've all finished playing around and I'll get the best deal. All right. So there we go. We're waiting and seeing. And Vaz is on the channel at the same time, broadcasting Joby Aviation. He's doing a great job. A few of his audience now have jumped in to see us. That's no surprise. It's a smaller community, but it will be bigger than this in the future. Of course, it's the new sector. We're on standby. There is Vaz delivering his show tonight, doing a tremendous job as he always does.
Across the Monterey Bay. Very good. So 32-mile flight. Full transition.
I tell you what, while we're waiting, just jump in and out. Just go and say Martyn sent me, just to say hello. It would make Vaz's day if you just popped in and said hello. You could just literally do it in 1 second. There's the link. Jump on that, say hello, come straight back. You won't miss anything, I promise you. We've got Sensei on standby. We're watching all sources. You will not miss anything. It's happening live as it happens. And we are good to go. All right, so I'm now up just 12-1, just pulled back a little bit. But that's okay. Very happy with that. I mean, you look like you were going to say something then, Sensei. I thought you were going to jump on it then.
No, I'm not.
Okay. All right. So you've got a second then, folks. If you want my all my trades, there is YouTube Electrum. Okay. It's a deal where you can get all of my trades as a YouTube plan. Never goes up in price, no inflation. You get all my trades and all the events that we do on YouTube. You've got my Discord server, which gives me one-on-one direct contacts. The only way you can message me directly. One-on-one support. We've got a great community, over 700 investors. No bots, no AI, no idiots, just good people doing good stuff. 2 live events a day. There'll be one right after this earnings, a live event in Discord, plus all my trades 24/7. And if you want the newsletter, which accompanies and supports the show, it's the show notes of the show. It's sensei.news/Trump. It's all pinned to the top and below in the comments and description. If you can't find it, you must have your eyes closed. There it is, sensei.news. 50% off for 5 people.
There's only 3 spaces.
3 spaces left. 3 spaces left for the 50% deal. You get everything all day, every day, every single trading day. There is something, very often there's more, but we like to say, at minimum, there is that. There is you've got the community around Substack. A lot of those people also talk to us on Discord, so we're a big community together. We've got the XRP Weekly. Every Sunday you get an XRP special. You've got the morning forecast every single trading day. The Portfolio Challenge. This is my go-to source. This is what I use to research my stock. This is what I use to buy. This is what I use to shower to in the morning. When I'm getting ready for the show, I've got Sensei's newsletter up on the shower, stuck on the wall, and it reads it out to me when I'm washing my hair, and you can see what a wonderful job I do of that too. So yeah, I'm watching the morning forecast every morning with the Portfolio Challenge. I'm laughing at Sensei. He reckons he's going to beat me. He's miles behind. He's 5,000. He's not going to beat me. Is he going to beat me? I don't know. Probably annoyed him now. He's probably annoyed him now because he thought, well, I can beat you definitely because I'm in crypto. That makes much more gains than your silly Google and your Coca-Cola. Well, I've annoyed him now because I bought more crypto than he's got now. So now I learned from the master. Now I'm playing against him. I love it. So we've got the Portfolio Challenge, the week ahead, the cheat sheets, everything, all the major events. We had one yesterday for Trump and we got one for today. Get yourself the newsletter. Sensei is here. I'm surprised we're very, very, very late indeed tonight for the earnings because the earnings call itself starts in 30 minutes and it's normally out an hour before. So we are very surprised. This has never gone on this long. I don't know why that would be. It's not been leaked. If it had been leaked, the market would be up or down dramatically. The stock would be down or something dramatically, and it's not. So we know it's not been leaked. We've not missed it. Nothing like that. And I've got every source going to me. I've got the Bloomberg terminal open here. I've got CNBC. Look, they're saying we're waiting for Nvidia. And if they ain't got it, you know, I mean, I say if they ain't got it, if Sensei hasn't got it, they're not going to have it, are they? That's what we're going to say. If Sensei hasn't got it, they're not going to have it, are they? So there you go. Your first port of call is Sensei and his newsletter. It's where I go in the morning. I mean, think of me tomorrow morning when you're reading the newsletter. Think Martyn's reading this right now in the shower. That's going to ruin the image, isn't it? That's like the moment when Jim Royal on the Royal Family bought a pair of jeans. You remember, off Twiggy, and everybody went, "I'm not buying them if he's buying them." It was like that. It completely killed Twiggy's jeans business.
Yeah, ignore what Martyn said there.
Yeah. You don't want to think of me in the morning showering with the newsletter. It's worse than that, actually. I've got the newsletter and I've got Sensei. So I'm literally naked, covered in soap, watching Sensei.
Anyway, we're waiting for Nvidia.
Anyway, waiting for... I ain't got time to read it. I get out of bed, boom, I'm in the shower. There you are. Your breakfast show's going. The newsletter. When am I supposed to do it? When I'm asleep? I mean, what am I supposed to do then? I've got no choice, have I? The only time to read the newsletter is in the shower when Sensei's delivering it live. I mean, there it is. So, you know, same. I bet same with everybody else, isn't it? Are you all in the shower at the same time? Are we all in the shower? Everyone's in the shower. It's a group shower event.
The whole audience. Yeah. I don't even know if I want to write the newsletter tomorrow.
Yeah, the
anyway,
whole audience.
This is very strange.
It's very odd.
Still haven't got the Nvidia earnings.
It is very, very odd. There will be some shouting going on in the offices of Nvidia. There's no question about it. There'll be something afoot this morning. It's probably my mention of the shower situation. It's probably that. That's what it is. It's put everybody off. Right. So we're on standby. All we can do is wait.
Oh, yeah. I can remind people of some of the numbers that we're waiting for.
Go ahead, Sensei. It's over to you, mate.
Yeah, if you have just tuned in, again, waiting for Nvidia earnings. They should have released by now, but I'll give you some of the consensus numbers. This is what analysts have put out. This is what the market will react on, the deviation from these numbers. Remember, revenue is consensus 65.7 billion. Adjusted earnings per share, the consensus for quarter four fiscal year 2026 is $1.53. We've got non-GAAP gross margin 75%, data center revenue at 58 to 60 billion, gaming revenue at 4.3 billion, automotive revenue at 663 million. Those are the numbers to look for, and especially forward guidance. So the forward number guidance consensus expectation is 71 billion to 72 billion. That's for quarter one fiscal year 2027 revenue. We want to see what their revenue forecasts are going to be, forward guidance. So we're going to be looking out for that number. We're going to be looking out for the full year number for the earnings per share. Currently, that consensus expectation for the forward guidance is $7.76. And then also fiscal year 2027 data center revenue, currently forecasted at 311 billion. That's what the consensus is. We want to see what their forward guidance will be. So still waiting. Nvidia is at least 10 minutes late. I think the latest they do it is 10 minutes ago. So we're still waiting for that. Remember, they've beaten on earnings every single time. So a beat is not what we're looking for. We want to beat, of course. If we get a miss, that's going to be awful. But what we want is a strong beat, but also good guidance. And then mentions of China in a good way, and other key things, all in the cheat sheet. Remember, we put out these cheat sheets for every major earnings, every major data release, FOMCs, PPIs, CPIs, PCEs. Those will be the cheat sheets. You've got my portfolio challenge. You've got the daily newsletter with all the news stories. So you can get that currently 50% off. There's 3 spots left, and that's what we're doing today. Only 3 more people can get it. The link is in the live chat. So yeah, Martyn, I'll be on standby waiting for this to release. It'll take me a few minutes to analyze it. We'll go over to some of the sources to see what they're saying. CNBC, Bloomberg, I know you've got them all up. And then I'll come back with the quick fire. So let's see. It should release any second now.
Brilliant. Thank you, Sensei. And welcome back. The last few days, Sensei has been very, very poorly. You can see, obviously, now Sensei is well again. You'll be back with us again. Here we go. It's moving. It's pumping. Ooh, hey. Look at that. Oh, now she goes down. Up and down like a bloody yo-yo.
Revenue is 68.1 billion. Estimated was 65. So they've beat on revenue. Q4 data center revenue was beaten by 2 billion. Q4 adjusted EPS is now $1.62. Okay, I'm going to analyze the documents and I'll get back to you. Let's see what CNBC and Bloomberg
Thank you.
are saying.
Come right back to me, Sensei. Thank you.
So we'll start going through them here at this point. But yeah, those bottlenecks are real and they exist on many levels, whether it be energy. The stock is higher by 1.8% at this point, climbing 2%. So we'll see what the numbers are. We'll see what the guidance is. But so far, the reaction is positive in the after-hour session. But again,
there's 200. I mean, the ceiling on this stock had been just under 195 for a few months.
Yeah.
So
there it goes.
All right, so here, okay, so I'm sure somebody's going to break it down. Christina's probably looking at this right now.
Sensei will come back to me when he's ready.
EPS
We're doing the analyst now.
Fourth quarter revenue, $68.1 billion. Net revenue, 42.96. Right, so looks like beats across the board. Now, I don't know if there's going to be, let's talk about guidance. I don't see that. Up, here it is. Nvidia sees first quarter revenue, 76.44 to 79 billion. I think the street was at 72. So, you know, I can do that math. That's
there
like
were
a 10%.
whispers of 75.
Yeah,
obviously
so better than a whisper, 10% revenue guide higher for the quarter. I mean, these are all robust numbers. There's no, you can't knock these numbers, but to Mike's point, the market sort of knows the, I don't want to say the game they're playing, but what they're involved in terms of the circular financing.
Yeah. And by the way, we had all the positive data points along the way in terms of pointing higher to a higher guide. We had the CapEx numbers being raised. Christina, you've gotten through the numbers?
Yeah, so I know. Thanks, Guy. Thanks for stealing my thunder. EPS. So we see a beat on the top and bottom line, $1.62 adjusted, which is higher than the buy side Q4 expectations on revenues of 68.1. That's up.
I'll give you my thoughts in a second on what I'm going to do.
Over quarter, so sequentially.
I know exactly what I'm going to do already.
Data center revenue also coming in exactly in line with what buy side was estimating, higher than sell side, $62 billion. Gross margins, we have these concerns about memory prices, et cetera. Gross margins coming in at 75%. I'll come back with some quotes. That there's a long one here from Jensen himself, and we'll get you more numbers too.
All right, Christina, thank you. The stock higher by almost 3%.
All right.
Brenda Vangello, your reaction.
That's enough from me. I'm going to bring Sensei back in the house in a second. So this is my play. We've got 25 minutes before the actual call where we get the actual sentiment, and that's where the real money is made. Sensei is just doing the numbers. You are on camera, Sensei, just so you know. So this is what we're going to do. This is what I'm looking at right now. We've broken the 201. Psychologically, it's a big deal. There are lots of cases of $300 price targets, 350s, and all sorts. So now we've got a good beat and a good guidance of some 10%. Sensei is just running the numbers for us. I am actually now looking to buy Nvidia on a dip. Now, if it runs and runs and runs, I don't give a monkey's bum about it. I'm not going to chase it because Google will go up with it. The whole market will go up with it. And I'm not really that bothered, right? I don't want to be doing that. And we can see it already happening. You can see Ethereum has gone up. So I've got a big chunk of change in Ethereum. XRP is going up. I've got a big chunk of change there. Bitcoin's gone up on it. I've got a big chunk of change there as well. And Google is a bit slow to react. There it goes. There it goes. I told you it would go, right? Look at that. Thank you very much. Right on cue. Google's going up. So at the end of the day, if I go to my portfolio, I'm up 13.5 grand today. It's another all-time high. How about it? How about it? And if I go to my all-time position here, remember we were 312,000 a few weeks ago, and then we started to buy all these dips. So we went all the way down to 275, and Sensei was going, Martin, what's going on? Where's all your money going? I said, it's all right, Sensei. I'm not selling. I'm buying more on the way down. My portfolio could drop to 225. Where is it now? 307. Wait for it. Drum roll. 309.5. We're nearly back at my all-time high, which is great because now we can run all the way to 400 grand because we've got much more shares, much lower prices, and it's happy days. And you can see it, look, running now. Running with 202. Now, it's not exploding, is it? It's not exploding, but it's up. So our portfolio is 309.6. That could easily go to 3010. There it goes, 3010. Bloody hell, he's good at this, isn't he? 3010, and Nvidia is coming down. You see now why I didn't rush to buy Nvidia? We always win here. We always win. We've done our valuations. We've done our calculations. Nvidia is now a buy. But when it comes to us, so I'm the little beggar man out on the street saying, give me a gift. I'm not in the queue. I'm not queuing up to buy it and being a pumper. No, I wait for everyone to go, all right, we've made a bit of money here. Let's dump it. Then it will go down really quick because people will try and drive it down and I'll go, thanks ever so much. I'm the little beggar man outside ready to pick some up. So that's what I'm going to do. I'm going to wait. In the meantime, my portfolio is going up and up and up. $311,000. We're about to hit another all-time high live on the show. Let's hear it. Let's hear it. Let's hear it. We're having that. We're having that. Very nice indeed. We're having that. Okay, good stuff indeed. Very exciting. Now we're starting to pump. We've got the pump music on and we are pumping. 310,000. Are we going to go 311? Anything can happen. It's starting to move. Let's have enough of that. 201. We're going to wait for it. I'm going to come back to Sensei and we've got 20 minutes to go before the call begins and we're on standby. Sensei, talk to me. What have you got, mate?
Yeah, still waiting for some more analysis, but we've got the main numbers. Obviously a good beat, which was good. We've got forward-looking forecast looking better than expected, so that's obviously caused a price increase from $196 on the stock to as high as $204 we actually went to. So now we're waiting for the actual earnings call, which will be starting in 20 minutes, and some more analysis. So yeah, earnings per share is now 162 versus 154. Estimated beat by 5%, revenue beat by 3% year over year. Earnings per share up 82% quarter over quarter, up 25%. So some good numbers from Nvidia. I'm just waiting to analyze the presentation before it even comes out. So I'll be on standby waiting for some more information. I'll get back to you in a couple minutes time.
Thank you, Sensei. Let me know when you're good to go. All right, so there we go. Sensei will be back with those numbers. So we're not rushing out. We've got nice chunk of change now, 310 grand. We're just sitting there. We've got our Nvidia going up. Yeah, a couple of bucks, 3 or 4%. Great. But do we want to buy it here? Of course we don't. No, we're not going to rush out and queue up and buy. We're going to wait. We're going to wait for it to come to us. And if it goes away, it doesn't matter. And let me show you how confident I am of letting it go. So Ethereum, look at that. We're in there. We bought it low. Bought it at 1.9. Now we trimmed today. We took a bit of money off the table. We wanted to be prepared for a drop because what we want to do is have money in case there was a drop. There wasn't. It's gone up. So I was wrong, right? Well, I still made money on my trades, but we didn't sit around and guess. We took some money off the table, prepared for Nvidia to go down. It might do it in a minute, but right now our Ethereum position is up. Our XRP position is up. This is risk on, folks. Risk on is back. 70,000. Sensei, I know you're still busy working it out, but was 70,000 a particular number we wanted to pass on Bitcoin? Was there some reason?
Yeah, I mean, even just psychological levels are more important sometimes than chart levels. So 70,000 will be a great level to get back above.
Right, thank you for that. Yeah, so we're looking at 69.4. So if we pass 70,000, we could have a little bit of a run up. So very happy. Maybe we won't go back down again. Maybe this was it. Maybe we bought the bottom. Well, we certainly did. We certainly have a good shot at that with the lot strategy that we've been doing. If you want to know about all my trades, literally nearly 3 years now, never lost on a trade. These are all my trades, and I've got more to put on tonight. There's another 10 odd trades that will go on tonight. All wins, all 100%. So we will be sharing all of that with you later on. So yeah, very, very exciting stuff. If you want any of that, it's pinned to the top. There's my Discord. There's my Discord server there. We've got one-on-one support. We've got a great community of 700 people. It is a private server. You can't just join. It's a couple of bucks a month. I don't need to make it expensive because I make money from investing. So my server is as inexpensive as it can be. I just want the best server in the world. I want to be like Sensei, the best newsletter in the world, right? That's what we want. So if you want to be part of our server with one-on-one support and all the rest of it, get yourself in our server. If you want Sensei's newsletter, there's 3 spots left with a 50% discount. There is the link. It's pinned in the top as well, but there it is. And anyone who joins the server tonight will be able to, I'll onboard you live on the show. You'll be onboarded live on the show, introduced to the team and everybody. One-on-one support. Right after this, you can begin with our debriefing after the show, sharing where we go next. So if you want any of that stuff, you know how to get it. There is Electrum. Now, Electrum is a YouTube membership, and that gives you all of the trades as well, and provides you extra content on YouTube. All right, I'm looking at these numbers on Nvidia. It's a great beat. It's a great beat. Expected 150. We got 162. It looks very nice on the chart. I got to be honest. It looks great. But you can see already starting to trim. We do not want to be running out and buying this. We want to be able to buy a little bit of a discount. Oh, Chad Sinclair, welcome to the family. Click subscribe, tap the like button, and Sensei will bring us the news any second. I'm just waiting for him to tell me he is ready. Oh,
we've got a few. Yeah, I can give you
got a few things now.
Here.
All right, this is Vaz on the channel at the same time doing Joby earnings. We're going to send you there shortly after the earnings from Jensen Huang. But right now, we're going to hear from Sensei. Sensei, give me. Oh, here we go. Here we go. Now you can start to think about buying. I'm not going to buy yet, but Sensei, talk to me, mate.
Yep. So we've got revenue 68.13 billion. That's the actual revenue versus the 65.7 billion consensus. That's a beat by up to 2.4 billion or 3.7%. And Nvidia had guided 65 billion. The beat over its own guidance midpoint was 3.1 billion. This is consistent with the company's pattern of beating guidance by roughly 2 to 3 billion per quarter. We've got non-GAAP earnings per share. We got $1.62 versus 1.53 consensus. That's a beat by about 9 cents or 6%. GAAP earnings per share came in at 176, inflated by 5.6 billion in unrealized gains on equity securities. Non-GAAP gross margin, that was 75.2% versus 75% consensus. So not a massive beat there. So in line, slightly above. The CFO's commentary attributes the sequential improvement to Blackwell's ramping with better mix, with better mix and cost structure. So obviously a positive signal there. So that's good because we were worried if anything below 73% would be a concern. We got 75% on that non-GAAP gross margin. Forward guidance. So Q1 fiscal year 2027 revenue guidance was 78 billion versus the consensus of 71 to 72 billion. That is the big number we're looking for, and that's a beat by 5.3 to 7 billion. So 7 to 10% above what the analysts were expecting. So that's why we got that initial pop. Remember, we were pricing in a beat, we were pricing in good revenue, but that revenue guidance was actually stronger, much stronger than the market imagined. So that was the number that matters most. Anything above 75 billion, which we referenced in the cheat sheet, would signal that the Blackwell super cycle is accelerating. So 78 billion clears that threshold by quite a wide margin at the height of that range, 79 billion. So it implies a 17% sequential growth. So that is quite a blowout guidance that we received there. Do you want me to continue going, Martyn?
Please do. Yeah, you're doing a great job.
Yeah, so we've got Q1 fiscal year 2027 non-GAAP gross margin. That was 75%. And that's pretty flat sequentially from Q4, 75.2%, consistent with management's mid-70s target. No margin compression. One thing to note is starting Q1 fiscal year 2027, Nvidia will include stock-based compensation in non-GAAP results. So do bear that in mind. We've also got Q1 fiscal 2027 non-GAAP operating expenses. 7.5 billion was the number we just saw. That's up 47% from Q4's 5.1 billion. But the jump is almost entirely due to the SBC reclassification of the 1.9 billion. So be careful, numbers don't always mean this. We are getting the stock coming back down now.
Exactly.
Let's continue with some of the key segment breakdown. So the data centers, 62 billion versus the 58 billion consensus. So that was a beat of about 2 to 3 billion. Data centers compute 51.3 billion. Let's see if there's anything in these numbers that are suggesting anything a little bit bearish. Data centers networking, 11 billion, that's up 263% year over year. Gaming, 3.73 versus the 4.3 billion consensus. So that was a miss there on gaming. A lot of people were waiting for the gaming numbers. That's down 13% sequentially, though up 47% year over year. The CFO commentary explains this channel inventory normalizing after strong holiday demand. Management flagged supply year 2027 and beyond. The research expected 4.3 billion. So this is quite a notable miss, though gaming is not the main story of Nvidia. Professional visualization, that was a big beat, but again, a small amount of Nvidia's earnings. Automotive was a slight miss as well. Full year, fiscal year 2026 results. Revenue was 215 billion, up 65% from fiscal year 2025. Non-GAAP is up 60% year over year. Non-GAAP gross margin at 71.3% for the full year. That's down a little bit. Data center full revenue 193 billion. That's up 68% year over year. We've got some things from the balance sheet. Let me know if you want me to stop, Martyn.
No, please carry on, because I can. I'm preparing to buy some. Carry on.
Okay, yeah, brilliant. Okay, so let's look at the balance sheet then. So the balance sheet and the cash flow, cash equivalents and marketable securities, 62.6 billion. That's up That's up from 60.6 billion last quarter, up from 43.2 billion a year ago. Operating cash flow, 36.2 billion in Q4, up from 23.8 billion in Q3 and 16.6 billion in Q4. Free cash flow is 34.9 billion in Q4. That's up 125% year over year. These are great numbers here. Shareholder returns, 4.1 billion in Q4. That's 3.8 billion in buybacks and 243 million dividends. Full year returns totaled 41 billion, 40 billion in buybacks, 974 million in dividends. So that's good as well. Let's go to the major announcements here. Non-GAAP accounting change starting Q1 fiscal year 2027. This is an announcement made. SBC will be included in the non-GAAP figures. Nvidia described stock-based compensation as a foundational part of its compensation program. This will make non-GAAP results look optically worse going forward compared to prior periods, and every analyst model will be needing rebaselining. So there's going to be a difference there in the accounting. Intel investment gains. This is another announcement here. Q4 included 5.6 billion in net other income driven from unrealized gains on equity securities, including Nvidia's previously announced investment in Intel's common stock. That boosted GAAP net income to 43 billion versus non-GAAP of 39 billion. So their investment in Nvidia is providing some profit there as well. Here's the CEO's quote. The CFO commentary and investor presentation emphasized that this is a record revenue quarter with the largest quarter-over-quarter dollar growth in the company's history. Nvidia states its data center revenue has increased nearly 13 times since the emergence of ChatGPT, and that even older Hopper and 6-year-old Ampere-based products remain sold out in the cloud. The company positions itself as the most performant, low-cost per token inference provider with the largest installed base. Anything unexpected? Well, we had a few things here. The 78 billion Q1 guide and zero China is the standout. So we got a beat there. 78 billion exceeds the most optimistic scenarios outlined in our cheat sheet earlier. Given Nvidia's history of conservative guidance, the actual Q1 number could land near 80 billion. So remember, they like to reduce their guidance and over-deliver. So we can be expecting 80 billion in the actual Q1. Final points here. Professional visualization of 74% sequential jump was not anticipated. Blackwell demand is now showing up in workstation and enterprise visualization markets, not just data centers. The SBC accounting change is something new as well. Supply constraints hitting gaming is the new headwind. So that's the area it lost out on. That might be why the stock is selling off a little bit. There was more expectations there. Plus, nothing from China. Let's see if the earnings report will tell us a bit more about China, and obviously the accounting change as well. But the numbers looking great. Big beat. Guidance is great. A few issues in gaming and accounting changes, but I think this is good. Let's wait and hear for China and anything more from the earnings report starting in 9 minutes. If you want all this research, if you wanted the cheat sheet, we send it out before every main earnings report, every big data report, CPI, PPI, we trade all these events. I give you the cheat sheet, everything you need to look at to be prepared for it, plus the daily newsletter, plus the portfolio challenge, what I'm doing with my money, getting ready for 2020, positioning my portfolio in 2026, ready for the drops, and also positioning, because this is the year I think crypto will bottom, the stock market will bottom, and we have some great entry points. So you can follow along with what I'm doing, not follow my trades, but follow along with my research. XRP weekly newsletter, the one-on-one DMs, all of that. We're giving it away from 3 people. So 3 people right now can get that 50% off. We don't do this often. Martyn's giving you the link in the live chat. If you want all that research, grab it in the newsletter, 50% off, 3 people. So that's my analysis, Martyn. What are you doing? What are your thoughts on this?
Well, I love it. I love it. I want to buy some, but I don't want to. I can see a good growth from here. I can agree with some of the models at 300 and 350 in 12 months, 18 months, good returns. I can see that. I'm going to start buying. We now know where we stand. It looks like the AI bubble is not going to pop anytime soon. We've got growth. We've got a great business. Everything about it looks good. I now know where we're going, and a lot has been cleared up with Blackwell as well, the way it's expanding. So I am looking at this now and thinking, what I'll do is I'll probably do it live on the show. So normally I share these trades, but it's happening live. I'll put some marker shares down. So 10 shares, $2,000, something like that. Anytime now, under 199, just psychologically, just nice to have it under 199. And then I can take it up. I can start increasing it as we go down lower. I don't know if we're going to drop that much tomorrow. It's one of those stocks that does, hence why 10 shares, $2,000. If we could then drop to 190, I'll buy 20 shares. That will bring it to 30 shares. And so it will just go on and on and on. But yeah, I think I'll even do it now. Let's do it, shall we? So we'll go trade, we'll go buy, we'll do limit order. Always do limit order, folks, especially after hours. You get completely stuffed if you don't. Let's do 10 shares. Let's do 199. Where are we? 199.99. Just a simple, it's nothing, no strategic chart or anything like that. Psychologically, 199.99. That's it. Just 10 shares, that's 1,999.90. So I will do that now. Continue. Yes, there's yes. 24-hour market review and swipe up. Boom.
Yeah, this is looking good. I mean, the chart is breaking out from the range. I know you don't focus too much on the chart, but the chart's breaking out of range. People will be waking up to a breakout on the chart, which we've been under $200 for quite a while. We only had one breakout, which turned into a fake out. So now we're above 200. We've got great earnings. Let's see what they say in the earnings call. Analyst ratings, 37 out of 39 are saying buy, 1 is saying hold, 1 saying sell. The consensus ratings are strong buy. The average target from these analysts is $261, the highest being $433. So we've got Morgan Stanley at 250, Bank of America at 275, HSBC at 310, Goldman Sachs at 250, Morningstar at 240. So yeah, I don't think they're going to be changing. They're going to be lowering their guidance. This has been a good beat.
Yeah. Good. So there we go. It's running up a little bit. I might not get it. Very good chance I won't get it. And that doesn't matter. It doesn't matter. I don't want to chase it up. There'll always come a time when people will sell it and trim profits. So if it's not today, it'll be tomorrow. And the 199.99 is what I regard as marker shares, just to get me in. And then I just go, I'll always buy more for less. That's it, and I'll drop a 1 or 2%. I mean, I would start doubling up as we go down. We've got 4 minutes to go. I'll let you know. This is what it looks like on my phone. It just says order placed. It looks like that. There you go, nice and green. Look, order placed. It's just going to sit there until that goes through. It might not. It might not, but I bet you any money it will, because the moment Jensen speaks, there'll be this violent up and down stuff, and even though we'll be heading upwards, probably you'll just get a little bit like that. And that's the power of a limit order. You always want to use a limit order. Don't just go buy, because you'll always get screwed this time of night. I mean, if you're a long-term investor and you end up paying a couple of bucks more for a share, you don't really care, then that's fine. But I'd prefer to get the best deal possible. Then that maximizes your gains. Right, we've got 3 minutes to go before the call starts.
There's only 2 newsletters left, Martin. I thought I'd let you know.
Oh, fantastic. Just 2 left. So if you want a newsletter, that's absolutely awesome. There it is. It's in the chat, martynlucas.com. Sorry, I beg your pardon. Sensei.news/Trump. It should be martynlucas.com, mate. martynlucas.com/Sensei.
We'll sort it out.
We'll sort it out. There you go. We'll have a link on the website. How about that? I'll give you a little link on the website, a permanent link on the website. In fact, I have, I think I have, haven't I? I have.
I think it's on the all links page. Yeah.
Yeah, there's a link there. Yeah, go and check it. But you probably won't get the best deal today, though. This is the best deal. This one here, the one we're giving you now with Trump at the end, is giving you 50%
Yeah, it's 50%
off.
We don't really do that often. I mean,
no,
we sold out yesterday. We're going to do it today, and then
absolutely
it'll be a while until we do the next one.
Absolutely, yeah. We're not giving it away. We're not giving it away. So, am I going to get? Put in the chat. Put in the chat, we've got 2 minutes to go. Do you think I'm going to get 10 shares at 199.90? What do you reckon, folks? Am I going to get it? Oh, it's getting pretty close. Less than $1. It could go up and down. Because we're after hours, movements like this, you just can't see it. You just can't see it. So you might go, oh yeah, we're at 201, and all of a sudden it will go, you've got it. Remember, the market makers want you to buy it. They make money when you buy it. And I spoke to some Wall Street managers who said, set a limit order, 9 times out of 10, it comes to you. Even if you're, unless you go, I want it for $100, it's not going to happen, right? But if you put a limit order within a little bit of this price, 9 times out of 10, you get it. They're trying to match you up all the time. And, look at that. It's only $1 away. Anyway, we've got... are you sticking around, Sensei, or are you going to disappear?
I'll disappear on the hour when the earnings call starts. I'll be watching it. But yeah, we'll see what happens. It'll be a volatile one. I've given all the numbers. Again, final thoughts is go look at those numbers. But yeah, it's looking good. A little bit of an issue with accounting and gaming. But yeah, overall, big beat. And not only is the beat important, as I said, it's the guidance. Guidance is blown past expectations as well, which if it didn't, we could have had a really nasty reaction. But we didn't. So we beat. So it's looking good on that front.
Great.
Yeah.
You're back in the morning with the breakfast show. So you're going to watch the earnings tonight. Are you going to watch it on their website, or where are you going to watch it? Where are you going to watch the earnings, Sensei?
There's only one place to watch it, on Martyn Lucas Investor.
Absolutely.
Why would I watch? I don't understand. Who would want to watch it on a website when you can watch it with the community?
Do you know what? I've never understood why anyone does that. You just sit there all by yourself, just listening, and like you've got all this information alongside it. I mean, the moment they start speaking, it's not like we talk over them or anything. We don't sit there just going, ha ha, what's going on? We listen in, we optimize the audio, we boost it to 4K, and and you got a community of investors. It makes more sense. I don't know why anyone watches it on the website. They probably don't. They used to till we came along. Now they watch it here, right? Anyway, let's get ready. We've got a few seconds to go. Sensei, I'll let you go. Thanks for coming in, mate. You've been an absolute star. Appreciate your analysis. The newsletter was fantastic. It's enabled me to buy with confidence. And in a minute, I'll have 10 shares of Nvidia. All right, here we go. They're lining it up. Thank you, mate. Cheers, mate.
Cheers, Martyn. Thank you.
Thank you. Bye-bye. See you in the morning, mate. So there goes Sensei on his toes. All right. So we are getting ready for the earnings any second now. Let me refresh that. They've just rebooted it.
Good afternoon. Oh. My name is Sarah, and I will be your conference operator today.
Here we go.
At this time, I would like to welcome everyone to NVIDIA's fourth quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star one again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the fourth quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 25th, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and free cash flow. Total revenue of $68 billion was up 73% year over year, accelerating from Q3. Growth on a sequential basis was also a record as we added $11 billion in data center revenue across a diverse and expanding set of customers, including cloud providers, hyperscalers,
Thank you very much.
AI model makers, enterprises, and sovereign nations. Demand for our Blackwell architecture, extreme co-designed at data center scale, continues to strengthen as inference deployments grow in addition to training. The transition to accelerated computing and the infusion of AI across existing hyperscale workloads continue to fuel our growth. Agentic and physical AI applications built on increasingly smarter and multimodal models are beginning to drive our financial performance. On a full year basis, data center generated revenue of $194 billion, up 68% year over year. We have now scaled our data center business by nearly 13x since the emergence of ChatGPT in fiscal 2023. We look ahead, we expect sequential revenue growth throughout calendar 2026, exceeding what was included in the $500 billion Blackwell and Rubin revenue opportunity we shared last year. We believe we have inventory and supply commitments in place to address future demand, including shipments extending into calendar 2027. Every data center is power constrained. Customers make critical architectural decisions based on performance per watt, given these constraints and the need to maximize AI factory revenue. SemiAnalysis declared Nvidia Inference King, as recent results from Inference X reinforced our inference leadership, with GB300 NVL72 achieving up to 50x performance per watt and 35x lower cost per token compared with Hopper. And continuous optimization of CUDA software helped deliver up to 5 times better performance on GB200 NVL72 just within 4 months. NVIDIA produces the lowest cost per token, and data centers running on NVIDIA generate the highest revenues. Our pace of innovation, particularly at our scale, is unmatched, fueled by an annual R&D budget approaching $20 billion and our ability to extreme co-design across compute and networking across chips, systems, algorithms, and softwares. We intend to deliver X factor leaps in performance per watt every generation and extend our leadership position over the long term. Q4 data center revenue of $62 billion increased 75% year over year and 22% sequentially, driven primarily by sustained strength in Blackwell and the Blackwell Ultra ramp. With Nvidia infrastructure in high demand, even Hopper and much of the 6-year-old Ampere-based products are sold out in the cloud. Nearly a year has passed since the release of our Grace Blackwell NVL72 systems. Today, nearly 9 gigawatts of infrastructure on Blackwell are deployed and consumed by the major cloud service providers, hyperscalers, AI model makers, and enterprises. Networking, a cornerstone of our data center scale infrastructure offering, was a standout this quarter, generating $11 billion in revenue, up more than 3.5x year over year. Demand for our scale up and scale out technologies reached record levels, both growing double digits sequentially, driven by strong adoption of NVLink, Spectrum-X Ethernet, and InfiniBand. On a year-over-year basis, growth was driven primarily by NVLink 72 scale-up switches, as Grace Blackwell systems accounted for roughly 2/3 of data center revenue in the quarter. NVLink scale-up fabric has revolutionized computing and demonstrates the power of extreme co-design across all of the chips of the supercomputer and the full stack. In Q4, we announced that we will enable AWS with NVLink to integrate with their custom silicon. Momentum is strong with our Spectrum-X Ethernet scale-up and scale-across networking as customers work to unify distributed data centers into integrated gigascale AI factories. For the full year, our networking business exceeded $31 billion in revenue, up more than 10x compared to fiscal 2021, the year we acquired Mellanox. Our demand profile is broad, diverse, and expanding beyond just chatbots. First, there is a fundamental platform shift from classical machine learning to generative AI. Strong evidence of ROI as hyperscalers upgrade massive traditional workloads to generative AI, including search, ad generation, and content recommender systems, is encouraging our largest customers to accelerate their capital spending. For example, at Meta, advancements in their GEM model drove a 3.5 increase in ad clicks on Facebook and more than 1% gain in conversations on Instagram, translating into meaningful revenue growth. With the same NVIDIA infrastructure, Meta Superintelligence Labs can train and deploy their frontier agentic AI systems. Frontier agentic systems have reached an inflection point. Claude Code, Claude Cowork, and OpenAI Codex have achieved useful intelligence. Adoption is skyrocketing, and tokens are profitable, driving extreme urgency to scale up compute. Compute directly translates to intelligence and revenue growth. Analysts' expectations for 2026 CapEx across the top 5 cloud providers and hyperscalers, who collectively account for a little over 50% of our data center revenue, are up nearly $120 billion since the start of the year and approaching $700 billion. We continue to expect the transition of classic data center workloads to GPU-accelerated computing and the use of AI to enhance today's hyperscale workloads and contribute toward roughly half of our long-term opportunity. Every country will build and operate some parts of its AI infrastructure, just like with electricity and internet today. In fiscal year 2026, our sovereign AI business more than tripled year over year and over $30 billion, driven primarily by customers based in Canada, France, the Netherlands, Singapore, and the UK. Over the long run, we expect our sovereign opportunity to grow at least in line with the AI infrastructure market as countries spend on AI proportional to their GDP. While small amounts of H200 products for China-based customers were approved by the US government, we have yet to generate any revenue, and we do not know whether any imports will be allowed into China. Our competitors in China, bolstered by recent IPOs, are making progress and have the potential to disrupt the structure of the global AI industry over the long term. To sustain its leadership position in AI compute, America must engage every developer and be the platform for choice for every commercial business, including those in China. We will continue to engage with the US and China governments and advocate for America's ability to compete around the world. We unveiled the Rubin platform last month at CES, comprised of 6 new chips: the Vera CPU, Rubin GPU, NVLink 6 switch, ConnectX-9 SuperNIC, Bluefield 4 DPU, and Spectrum 6 Ethernet switch. The platform will train MOE models with 1/4 the number of GPUs and reduce inference token costs by up to 10x compared to Blackwell. We shipped our first Vera Rubin samples to customers earlier this week, and we remain on track to commence production shipments in the second half of the year. Based on its modular, cable-free tray design, Rubin will deliver improved resiliency and serviceability relative to Blackwell. We expect every cloud model builder to deploy Vera Rubin. Moving to gaming. Gaming revenue of $3.7 billion increased 47% year on year, driven by strong Blackwell demand and improved supply. GeForce RTX is the leading platform for PC gamers, creators, and developers. In Q4, we added several new technologies and advancements, including DLSS 4.5, which uses AI to bring game visuals to a new level. G-Sync Pulsar, bringing incredible clear graphics even in motion, and 35% faster LLM inference across leading AI PC frameworks. Looking ahead, while end demand for our products remains strong and channel inventory levels are healthy, we expect supply constraints to be the headwind to gaming in Q1 and beyond. For professional visualization, it crossed the $1 billion mark for the first time, with revenue of $1.3 billion, up 159% year over year and 74% sequentially. During the quarter, we launched the RTX Pro 5000 Blackwell workstation with 72 gigabytes of fast memory for AI developers running LLMs and agentic workflows. Automotive revenue of $604 million was up 6% year over year and was driven by robust demand for self-driving solutions. At CES, we introduced Alpamayo, the world's first open portfolio of reasoning, vision,
just bought
language,
10 more shares.
models,
I shared it on Discord before I
simulation
did it.
blueprints and data sets
That's
enabling
20 shares of
vehicles
Nvidia
that
now.
can think. The first passenger car featuring Alpamayo, built on Nvidia Drive, will be on the road soon in the new Mercedes-Benz CLA. Physical AI is here, having already contributed north of $6 billion in Nvidia revenue in fiscal year 2026. Robotaxi rides are growing exponentially with commercial fleets from Waymo, Tesla, Uber, WeRide, and Zoox. And many others are expected to scale from thousands of vehicles in 2025 to millions over the next decade, creating a market poised to generate hundreds of billions of dollars of revenue. This expansion will demand orders of a magnitude more compute, with every major OEM and service provider developing on NVIDIA's platform. We continue to advance robotics development with the new NVIDIA Cosmos and Isaac Group, open models, frameworks, and NVIDIA's powered robots and autonomous machines for leading companies, including Boston Dynamics, Caterpillar, Franco Robotics, LG Electronics, and Neuro Robotics. To accelerate industrial physical AI adoption, we also announced new expanding partnerships with Dassault Systems, Siemens, and Synopsys to bring NVIDIA AI infrastructure, Omniverse digital twins, world models, and CUDA-X libraries to millions of researchers, designers, and engineers building the world's industries. Let's move to the rest of the P&L. GAAP gross margin was 75%, and non-GAAP gross margin was 75.2%, increasing sequentially as Blackwell continued to ramp. GAAP operating expenses were up 16% sequentially and up 21% on a non-GAAP basis related to new product introductions and compute and infrastructure costs. Non-GAAP effective tax rate for the fourth quarter was 15.4%, below our outlook for the quarter, primarily due to the impact of a one-time tax benefit. Inventory grew 8% quarter over quarter, while purchase commitments also increased significantly, as we have strategically secured inventory and capacity to meet demand beyond the next several quarters. This is further out in time than usual and reflects the longer demand visibility we have. While we expect tightness in the supply for our advanced architectures to persist, we remain confident in our ability to capitalize on the growth opportunity ahead with our scale, expansive supply chain, and the long-standing partnerships continuing to serve us well. We generated free cash flow of $35 billion in Q4 and $97 billion in fiscal year 2026. For the year, we returned $41 billion, or 43% of free cash flow, to our shareholders in the form of share repurchases and dividends. We continue to invest in our technology and our ecosystem to cultivate market development, drive long-term growth, and ultimately yield total shareholder returns superior to the market or our peer group. Importantly, we will continue to run a strategic and disciplined process as it relates to our investments, and we remain committed to returning capital to our shareholders. Let me turn to the outlook for the first quarter. Starting this quarter, we will be including stock-based compensation expense in our non-GAAP results. Stock-based compensation is a foundational component of our compensation program to attract and retain world-class talent. Let me first start with revenue. Total revenue is expected to be $78 billion, plus or minus 2%. We expect most of our growth to be driven by data center. Consistent with last quarter, we are not assuming any data center compute revenue from China in our outlook. GAAP and non-GAAP gross margins are expected to be 74.9% and 75%, respectively, plus or minus 50 basis points. For the full year, we continue to see gross margins in the mid-70s. We will keep you updated on our progress as we prepare for the Vera Rubin transition. GAAP and non-GAAP operating expenses are expected to be approximately $7.7 billion and $7.5 billion, respectively, including stock-based compensation expense of $1.9 billion. For the full year, we expect non-GAAP operating expenses to grow in the low 40s on a year-over-year basis as we continue to invest in our expanding opportunity set. For the full year, fiscal year 27, we expect GAAP and non-GAAP tax rates to be in between 7 and 19%, excluding any discrete items and material changes to our tax environment. With that, let me turn the call over to Jensen. I think he has a few words for us.
This quarter, we significantly deepened and expanded our partnerships with leading frontier model makers. We recently celebrated OpenAI's launch of GPT 5.3 Codex, trained with and inferencing on Grace Blackwell NVLink 72 systems. GPT 5.3 Codex can take on long-running tasks that involve research, tool use, and complex execution. 5.3 Codex is deployed broadly inside NVIDIA. Our engineers love it. We continue to work with OpenAI toward a partnership agreement and believe we are close. We are thrilled with our ongoing partnership with OpenAI, a once-in-a-generation company we've had the pleasure of partnering with since their first days. Meta Superintelligence Labs is scaling up at lightning speed. Last week, we announced that Meta is deploying millions of Blackwells and Rubin GPUs.
William
NVIDIA
Bond is
CPUs,
gifting memberships.
and
Show some
Spectrum
love
X
for our
Ethernet for training
admin
and
on
inference.
Discord.
How
generous is this?
We announced a partnership with Anthropic and a $10 billion investment in their company. Anthropic will train an inference on Grace Blackwell and Vera Rubin systems. Anthropic's Claude Codework agent platform is revolutionary and has opened the floodgates for enterprise AI adoption. Between Claude Codework and OpenClaw, compute demand is skyrocketing, and ChatGPT moment of agentic AI has arrived. With partnerships spanning Anthropic, Meta, OpenAI, and xAI, NVIDIA deployed across every cloud, and with our ability to build full-stack AI infrastructure from the ground up or support them in the cloud. We're uniquely positioned to partner with frontier model builders at every stage: training, inference, and AI factory scale-out. Finally, we recently entered into a non-exclusive licensing agreement with Grok for its low-latency inference technology and welcomed a team of brilliant engineers to NVIDIA. As we did with Mellanox, we will extend NVIDIA's architecture with Grok's innovations to enable new levels of AI infrastructure performance and value. We look forward to sharing more at GTC next month. Okay, back to you.
We will now transition to Q&A. Operator, please pull for questions.
I've just been buying heavily, shared on Discord.
I would like to remind everyone,
on
in order
Electrum.
to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I think you mentioned that you now have growth visibility into calendar 27 also, and I think your purchase commitments kind of reflect that confidence. But Jensen, I'm curious, when you look at your top cloud customers, cloud CapEx close to $700 billion this year, many investors are concerned that it would be harder for this level to grow into next year. And for several of them, their cash flow generation capability is also getting compressed. So I know you're very confident about your roadmap, right, and your purchase commitments and whatnot, but how confident are you about your customers' ability to continue to grow their CapEx? And if their CapEx doesn't grow, can NVIDIA still find a way to grow in that envelope? Thank you.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them. All of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers. And so the simple logic of it, the simple way to think about it is computing has changed. What used to be software running on computers, modest amount of computers, call it $300 or $400 billion worth of CapEx each year, has now gone into AI. And AI, in order to generate tokens, you need compute capacity. And that translates directly to growth, and that translates directly to revenues.
Your next question comes from Joe Moore with Morgan Stanley. Your line is open.
Great, thank you, and congratulations on the numbers. You talked about some of the strategic investments that you've made into Anthropic and potentially OpenAI, CoreWeave as well, but also partners, Intel, Nokia, Synopsys. You're clearly at the center of everything. Can you talk about the role of those investments and kind of how do you view the balance sheet as a tool to kind of grow NVIDIA's position in the ecosystem and participate in that growth?
As you know, fundamentally at the core of everything NVIDIA is our ecosystem. That's what everybody loves about our business. The richness of our ecosystem. Just about every startup in the world is working on NVIDIA's platform. We're in every cloud. We're in every on-prem data center. We're all over the world's edge and robotic systems. Thousands of AI natives are built on top of NVIDIA. We want to take the great opportunity that we have as we're in the beginning of this new computing era, this new computing platform shift, to put everybody on NVIDIA. Everything is already built on CUDA, and so we're starting from a really terrific starting point. But as we build out the entire AI ecosystem, whether it's in AI for language or physical AI or AI physics or biology or robotics or manufacturing, we want all of these ecosystems to be built on top of NVIDIA. And this is such a wonderful opportunity for us to invest into the ecosystem across the entire stack. Our ecosystem is also richer today than it used to be. We used to be largely a computing platform on GPUs, but now we're a computing AI infrastructure company, and we have computing platforms on, well, every aspect of that. And everything from computing to AI models to networking to our DPU, all of that has computing stacks on top of it. And as I mentioned before, whether it's in enterprise or in manufacturing, industrial, or science or robotics, each one of these ecosystems have different stacks. And we want to make sure that we continue to invest into our ecosystem. So our investments are focused very squarely, strategically on expanding and deepening our ecosystem reach.
Your next question comes from Harlan Sur with JP Morgan. Your line is open.
Good afternoon. Thanks for taking my question. Networking continues to rise as a percentage of your overall data center profile, right? Through fiscal 26, your networking revenues accelerated on a year-over-year basis every single quarter, right? With 3.6x growth, as you guys mentioned, year-over-year growth in Q4. Obviously, on the strength of your scale-up and scale-out networking product portfolio, I seem to remember that first half of last year, your annualized run rate on your Spectrum-X Ethernet switching platform was around $10 billion annualized. It looks like that may have stepped up to around $11-12 billion in the second half of last year. Jensen, looking at your order book, especially with Spectrum-X GS, upcoming 102T Spectrum-6 switching platforms launching soon, where is the Spectrum run rate trending now, and as you foresee exiting sort of this calendar year?
Yeah, as you know, we see ourselves as an AI infrastructure company, and the AI computing infrastructure includes CPUs, GPUs, and we invented NVLink to scale up the one computing node into a giant computing rack. We invented the idea of a rack scale computer. We don't ship nodes of computers, we ship racks of computers. And that NVLink that NVLink switch scale-up system is then scaled out using Spectrum-X and InfiniBand. We support both. And then further, we also scale across data centers using Spectrum-X scale across. And so the way we think about networking is really an extension. We offer everything openly so that people could decide to mix and match in different scale and however they would like to integrate it into their bespoke data center. But in the final analysis, it's all one big part of our platform. And the invention of NVLink really turbocharged our networking business. Every rack comes with 9 nodes of switches, and each one of them has 2 chips in it, and in the future they'll have more. And so the amount of switching that we do per rack is really quite incredible. We're also now the largest networking company in the world. And if you look at Ethernet, we came into the Ethernet market about a couple of years ago into Ethernet switching. And I think that we're probably the largest Ethernet networking company in the world today, and surely will be soon. And so Spectrum-X Ethernet has been a home run for us. But we're open to however people want to do networking. Some people just really love the low latency and the scale-up capability of InfiniBand, and we will continue to support that, of course. And some people love to integrate their networking across their data center based on Ethernet. And we created an Ethernet capability that extends Ethernet with artificial intelligence way of processing in the data center, and we're incredibly good at that. And our Spectrum-X performance really shows it. The difference of it, when you built a $10 billion or $20 billion AI factory, the difference of 10%, and it could be easily 20% on the effectiveness and the utilization of your network for your data center, that translates to real money. And so NVIDIA's networking business is really growing fast. And it's, I think it's just because we built the AI infrastructure so effectively, and the AI infrastructure business is growing incredibly fast.
Your next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess with CPX for large context windows and Grok likely adding a decode specific solution, curious how we should think about your future roadmap. Should we be thinking about customized silicon either by workload or customer as an increasing focus by NVIDIA, particularly helped by your move to a dielet architecture? Thanks so much.
Everybody should want to push out dielet as long as they can. And the reason for that is because every time you cross a dielet, you have a dielet, you have to cross an interface. Every time you cross an interface, you add latency, you add power unnecessarily. We're not allergic to dielet. We use dielets already, but we try to use dielets only when we absolutely have no choice but to do so. And so if you look at the Grace Blackwell architecture and the Rubin architecture, we use 2 giant reticle limited dies and we abut them. And that reduces the amount of architecture crossing. The dielet tax shows up in the architecture effectiveness of the competitors. If you look at NVIDIA, people call it our software advantage. But where software starts and architecture starts and ends is kind of hard to tell. It's, our software is effective because our architecture is so good. And so the CUDA architecture is unquestionably more effective, more efficient, delivers more performance per flop, per watt than any computing architecture out there. And it's because of the way we architect. With respect to how we think about Grok and the low latency decoder, I've got some great ideas that I'd like to share with you at GTC. But the simple idea is that our infrastructure is incredibly versatile because of CUDA, and we're going to continue to do that. All of our GPUs are architecturally compatible, which means that when I'm working on optimizing models today for Blackwell, all of that work and all of that dedication to optimizing software stacks and new models also benefit Hopper and also benefit Ampere. It's the reason why A100 continues to feel fresh and continues to stay performant years after we've deployed it into the world. Architecture compatibility allows us to do that. It allows us to invest enormously in software engineering and optimization, knowing that our entire install base in the cloud, on-prem, everywhere, from generations of architectures of GPUs will all benefit. And so we'll continue to do that, and allows us to extend the useful life, allows us to have innovation, flexibility, and velocity, which translates to performance, and very importantly, performance per dollar and performance per watt for our customers. And so what we'll do with Grok is you'll come to see GTC, but what we'll do is we'll extend our architecture with Grok as an accelerator in very much the ways that we extended NVIDIA's architecture with Mellanox.
The next question comes from Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. Colette, I wanted to dig a little bit into the call for sequential growth through the year. So, I mean, you grew this quarter more than $10 billion sequentially in data center, and the guide seems to imply, you know, the bulk of the increase, $10 billion sequential in data center. So, like, how do you see that as we go through the year, especially as Rubin ramps into the back half? Blackwell's been a pretty massive acceleration for sequential growth. Should we expect something similar as we get to Rubin? And then I was also just hoping you could comment on your expectations for gaming. I understand the memory issues and everything else. Do you think gaming can still grow year over year in fiscal 27, or will that be under more pressure given memory? So those two questions, please. Thank you.
Thanks, Stacy. Let me start with the revenue going forward. Again, we're trying to look at revenue quarter by quarter. As you think about the full year, we are absolutely going to be still selling and providing Blackwell, probably at the same time that we're also seeing Vera Rubin come to market. This is a very great architecture that helps them just today, quickly standing up, and have already planned on many different orders across the different customers to provide that. It's too early yet to determine how much in terms of that Vera Rubin, that beginning ramp will start in the second half, and we'll get through it. But no confusion in terms of the strong demand and the interest. We do expect pretty much every single customer to be purchasing Vera Rubin. The question is, how soon are we in market, and how soon are they able to stand that up in terms of in their data centers? That was your first part. The second part was focusing on our gaming. As much as we would love to have additional more supply, we do believe for a couple quarters, it is going to be very tight. If things improve by the end of the year, there is an opportunity to think about what that is from a year-over-year growth. But it's still too early for us to know at this time, and we'll get back to you as soon as we can.
Your next question comes from Atif Malik with Citi. Your line is open.
Thank you for taking my question. Jensen, I'm curious if you can touch on the importance of CUDA, as now more of the investment dollars in AI are coming from inference workloads.
Oh, without CUDA, we wouldn't know what to do with inference. The entire stack from TensorRT LLM that we introduced a few years ago, which is still the most performant inference stack in the world, optimizing it for NVLink requires us to discover and invent new parallelization algorithms that sits on top of CUDA to distribute the workload and the inferencing to take advantage of the aggregate bandwidth across NVLink 72. NVLink 72 has enabled us to deliver generationally 50 times more performance per watt. It's just an incredible leap, and it's sensible. NVLink 72 is a great invention. It was hard to do. The creation of the switching technology, disaggregating the switches, building the system racks, all of that, we did it all in plain sight, and everybody knew how hard it was for us to do. And but the results are incredible. So performance per watt is 50 times, performance per dollar 35 times. And so the leap in inference is incredible. It's very important. It's really important to realize that inference equals revenues now for our customers. Because agents are generating so many tokens and the results are so effective, when the agents are coding, it's off generating thousands, tens of thousands, hundreds of thousands, because they're running for, minutes to hours. And so these systems, these agentic systems, are spawning off different agents working as a team. The number of tokens that are being generated is really, really gone exponential. And so we need to inference at a much higher speed. And when you're inferencing at a much higher speed, and each one of those tokens are dollarized, it directly translates into revenues. And so inference performance equals revenues for our customers. For the data centers, inference tokens per watt translates directly to the revenues of the CSPs. And the reason for that is because everybody is power limited. And so, no matter how many data centers you have, each data center, 100 megawatts or 1 gigawatt has power limits. So the architecture that has the best performance per watt translates, because each token, the performance tokens per watt, each token is dollarized. Tokens per watt translates to dollars per watt, which translates in a gigawatt directly to revenues. And so you could see that every CSP understands this now. Every hyperscaler understands this, that CapEx translates to compute. Compute with the right architecture translates to maximizing revenues, and compute equals revenues. Without investing capacity today, without investing in compute, there cannot be revenue growth. And that I think everybody understands. Compute equals revenues. Choosing the right architecture is incredibly important. It's more than strategic now. It directly affects their earnings. And choosing the right architecture, the one with the best performance per watt, is literally everything.
Your next question comes from Ben Reitzes with Melius Research. Your line is open.
Yeah, hey, thanks. First, let me say kudos on including the stock comp in non-GAAP. I think that's a great move, but that isn't my question. My question's around gross margins and the sustainability of the mid-70s long term. Should we read into the visibility on supply being available into calendar 27 that it's sustainable until then? And then, Jensen, what about after that? Are there innovations in memory consumption you can unveil that makes us feel better about the ability to keep margins at that level for a long time? Thanks.
The single most important lever of our gross margins is actually delivering generational leaps to our customers. That is the single most important thing. If we could deliver generationally performance per watt that exceeds dramatically what Moore's Law can do, if we can deliver performance per dollar dramatically more than the cost of our systems, than the price of our systems, then we can continue to sustain our gross margins. That's the simple, most important concept. The reason why we're moving so fast is because, number one, the demand for tokens in the world as a result of the inflection points that we've gone through has gone completely exponential. I think we're all seeing that, to the point where even our 6-year-old GPUs in the cloud are completely consumed and the pricing is going up. And so we know that the amount of computation necessary, the amount of compute necessary for the modern way of doing software is growing exponentially. And so our strategy is to deliver an entire AI infrastructure every single year. This year, we introduced 6 new chips. Rubin next generation will do many new chips as well. And every single generation, we are committed to deliver many X factors of performance per watt and performance per dollar. And that pace and our ability to do extreme co-design allows us to deliver that value and that benefit to the customers. And that is the single most vital thing as it relates to our value delivered.
Your next question comes from Antoine Chikaiban with New Street Research. Your line is open.
Hi, thanks a lot for taking my question. I'd like to ask about space data centers, which some of your customers are considering. How feasible do you think that is, and on what kind of horizon? And what do the economics look like today, and how do you think that could evolve over time? Thank you.
Well, the economics are poor today, but it's going to improve over time. As you know, the way that space works is radically different than how it works down here. There's an abundance of energy, but solar panels are large, but there's plenty of space in space. The heat dissipation, it's cold in space. However, there's no airflow, and so the only way to dissipate heat is through conduction. And the radiators that you need to create are fairly large. Liquid cooling is obviously out of the question because it's heavy and freezes, and so the methods that we use here on Earth are a little different than the way we would do it in space. But there are many different computing problems that really wants to be done in space, and so Nvidia is already the world's first GPU in space. Hopper is in space, and one of the best use cases of GPUs in space is imaging, to be able to image at extremely high resolutions using of course optics and artificial intelligence, and to be able to do that computation of reprojection of different angles and be able to up-res and do noise reduction and just be able to image at very high resolutions, extremely large scales, and very, very fast. It's hard to do that by sending petabytes and petabytes of imaging data back here on Earth and doing that work. It's easier just to do it out in space, and then ignore all of the data collected and processed until you see something interesting. And so artificial intelligence in space will have very interesting applications.
Your next question comes from Mark Lipacis with Evercore ISI. Your line is open.
Hi, thanks for taking my question. I want to pick up with the comment you made on the script about revenue diversification. I believe, Colette, you said that hyperscalers were over 50% of revenues, but growth was led by the rest of your data center customers. And as a clarification, I just want to make sure I understood that. Does that imply your non-hyperscale customers grew faster? And if so, can you help us understand what are the non-hyperscalers doing different? Are they doing different things than the hyperscalers, or the same things on a different scale? And do you expect this trend to continue? Would you expect your customer base to evolve to a point where non-hyperscalers become a bigger part of your the larger part of your business? Thank you.
Yes, let's see if we can help on this question. So when you think about our top 5, as we articulated as being our CSPs, our hyperscalers, and they have right now sat at about 50% of our total revenue. There's a big organization, therefore, of diversity of all different other types of companies that we are working with. That it goes through our AI model makers, that goes through our enterprises, that goes to supercomputing, it goes to our sovereigns. There's a lot of other different facts on there. But you are correct. It's a very fast-growing area as well. We have a strong position in terms of all of our different cloud providers on our platform. And now we also have an extreme diversity of different customers that we are seeing all the way across the world. And this will really benefit seeing that diversity and being able to serve all of those parts. I'm going to see if Jensen wants to add a bit more.
Yeah, this is one of the advantages that we have with our ecosystem, all built on top of CUDA. We're the only accelerated computing platform that is in every cloud, that's available through every single computer maker, available at the edge. And we're now cultivating telecommunications. Obviously, the future radios will all be AI-driven radios, and the future wireless network will also be a computing platform. That is a foregone conclusion, but somebody has to go and invent the technologies to make that possible. And we created a platform called Ariel to go do that. We're out in just about every single robot, every single self-driving car. Our ability, CUDA's ability, to have the benefit of the performance of specialized processors on the one hand, with the tensor cores inside our GPUs. On the other hand, the flexibility of CUDA allows us to solve language problems, computer vision problems, robotics problems, to biology problems, physics problems, and just about all kinds of AI and all kinds of computation algorithms. And so the diversity of our customer base is one of the greatest strengths that we have. The second thing, of course, is without our own ecosystem, even if our processor was programmable, if we didn't cultivate our ecosystem, and talking about some of the things that we're doing today, investing in our future ecosystem and continue to enhance our ecosystem. Without our ecosystem, it's hard for us to grow beyond what design wins we capture for somebody else's ecosystem. And so we could grow and expand our ecosystem very naturally because of our the platform that we created. And then lastly, one of the things that's really important is the partnerships that we have with OpenAI and Anthropic, with xAI, with Meta, now makes, and of course, just about every single open source in the world. There's 1.5 million AI models on Hugging Face. All of it runs on NVIDIA CUDA. And so an open source in totality probably represents the largest, it's the second largest model in the world. OpenAI is the largest. Second largest is probably all the collection of all the open sources. And so NVIDIA's ability to run all of that makes our platform super fungible, super easy to use, and really safe to invest into. And so that creates the diversity of customers and the diversity of the platforms and available in every single country, and because we support the whole world's ecosystem.
Your next question comes from Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I guess, sticking with the idea of the platform and extreme co-design, some of the news over this last quarter has obviously been NVIDIA's ability or push to bring Vera CPUs to market on a standalone solution basis. So I guess, Jensen, I'm curious of what's the importance that Vera plays in this architecture evolution as we move forward? Is this being driven more by the proliferation or the heterogeneity of inference workloads? I'm just curious of how you see that evolving for NVIDIA, particularly on a standalone CPU basis. Thank you.
Yeah, thanks. And I'll tell you some more about it at GTC. But at the highest level, we made fundamentally different architecture decisions about our CPUs compared to the rest of the world's CPUs. It's the only data center CPU that supports LPDDR5. It is designed to be focused on very high data processing capabilities. And the reason for that is because most of the computing problems that we're interested in are data-driven, artificial intelligence being one. And the single-threaded performance in this ratio with bandwidth is just off the charts. And we made those architectural decisions because in the entire phase, the different phases of AI, from data processing, before you even do training, you have to do data processing. So you have data processing, pre-training, and in post-training now, the AIs are learning how to use tools. And the usage of tools, many of those tools run in CPU only environments, or they run in CPU with GPU accelerated environments. And Vera was designed to be an excellent CPU for post training, and so some of the use cases in the entire pipeline of artificial intelligence includes using a lot of CPUs. You know, we love CPUs as well as GPUs, and when you accelerate the algorithms to the limit as we have, Amdahl's law would suggest that you need really, really fast single-threaded CPUs, and that's the reason why we built Grace to be extraordinarily great at single-threaded performance, and Vera is off the charts better than that.
Your next question comes from Tim Arcuri with UBS. Your line is open.
Thanks a lot. Colette, I was wondering if you can talk about the deployment of capital. I know that you really jacked up the purchase commits, but it sounds like maybe you're over the hump on this, and you're going to probably generate about $100 billion in cash this year. So, and you know, pretty much no matter how good the results have been, the stock hasn't really gone up much. So I would think that you probably feel like this is a pretty good price to be, you know, buying back a bunch of it here. So I was wondering if you can talk about that, like, you know, question being, why not put a big stake in the ground and just, you know, have a huge share repo here? Thanks.
So thanks for the question. We look at our capital return very, very carefully, and we do believe that one of the most important things that we can do is really supporting the extreme ecosystem that's in front of us, that stems from everywhere, from our suppliers and the work that we need to do to assure that we can have the supply that's needed and help them from a capacity, all the way that we are in terms of the early developers of the AI solutions that will be on our platform. So we will continue to make this a very important part of our process and strategic investments. But of course, we are still repurchasing our stock. We are still with our dividend as well. And we will continue to find the right unique opportunities within the year for doing those different purchases.
Your final question comes from Jim Schneider with Goldman Sachs. Your line is open.
Thank you for taking my question. Justin, you've previously outlined the potential to get to 3 to 4 trillion of data center capex by 2030, which implies a potential acceleration in growth rates, which you've sort of guided to this, at least this next quarter. The question is, what are some of the key application areas that you believe are most likely to drive that inflection? Is that physical AI, agentic, or something else? And do you still feel good about that $3 to $4 trillion envelope? Thank you.
Yeah, let's back that up and just reason through it from a few different ways. So the first way is on first principles, the way that software is done in the future using AI is token driven. And I think everybody talks about tokenomics and talks about data centers generating tokens, and inference is about generating tokens. And we generate tokens. You know, we were just talking about tokens, how NVIDIA's NVLink 72 enabled us to generate tokens at 50 times better performance per unit energy than the previous generation. And so token generation is at the center of almost everything that relates to software in the future and relates to computing. If you look at the way we use computing in the past, however, the amount of computation demand for software in the past is a tiny fraction of what is necessary in the future. And AI is here. AI is not going to go back. AI is only get better from here. And so if you think about it, and you said, okay, well, the world was investing about $300 to $400 billion a year in classical computing, and now AI is here, and the amount of computation necessary is 1,000 times higher than the way we used to do computing. The computing demand is just a lot higher. And so if we continue to believe there's value in it, and we'll talk about that in a second, then the world will invest to produce that token. And so the amount of token generation capability that the world needs is a lot more than $700 billion. And I'm fairly confident that we're going to continue to generate tokens. We're going to continue to invest in compute capacity from this point out. And fundamentally, because every single company depends on software, every software will depend on AI. And so every company will produce tokens. And that's the reason why I call them AI factories. And whether you're a company in the cloud data centers, you have AI factories to generate tokens for your revenues. If you're an enterprise software company, you're going to generate tokens for the agentic systems that are on top of your tools. If you are a robotics factory, and self-driving cars, first indication of that, you have huge supercomputers, which are basically AI factories, to generate tokens that goes into your cars, that becomes its AI. And then you also have to put computers inside the cars to continuously generate tokens. And so we're fairly sure now that this is the future of computing. Now, why is it so certain that this is the future of computing? And the reason for that is because the way we used to do software was pre-recorded. Everything was captured a priori. We pre-compile the software. We pre-write the content. We pre-record the videos. But now everything is generative in real time. And when it's generated in real time, it can take into context of the person, the situation, the query, and the intentions could all be taken into consideration to generate the outcome of this new software we call AI, agentic AI. And so the amount of computation necessary is far, far greater than pre-recorded. You know, just as a computer has a lot more computation capability than a DVD recorder, a DVD player that was pre-recorded, artificial intelligence needs a lot more computing capability than the way we used to do software in the past. Now, the question about computation, about sustainability at the first level is just at the computer science level. This is the way computing is going to be done. Now, from an industrial level, because all of our companies in the final analysis are powered by software, and the cloud companies are powered by software, and if the new software requires tokens to be generated, and the tokens are monetized, then it stands to reason that their data center build-out directly drives their revenues. And so compute drives revenues. And I think they all understand that. I think people are increasingly starting to understand that as well. And then lastly, the benefits that AI produces for the world ultimately has to generate revenues. And we're seeing right in front, right being developed as we see, as we stand here, agentic AI has turned an inflection point. And it literally happened in the last couple of 2-3 months. Of course, inside the industry, we've been seeing it for a while, probably 6 months or so. But the world is now awakened to the agentic AI inflection. The agents are super smart. They're solving real problems. Coding is obviously supported by agentic systems now. And all of our coders here at NVIDIA are using agentic systems, either Cloud Code or OpenAI Codex, enormously to, and oftentimes both, and Cursor, oftentimes all three, depends on the use case. But they have agents and design partners, engineering partners to help them solve problems. And you could see their revenues skyrocketing. These companies, in the case of Anthropic, I think their revenues 10x'd in a year. And they are severely capacity constrained because demand is just incredible. And the token demand is incredible. The token generation rate is growing exponentially. And the same thing with, of course, OpenAI. Their demand is incredible. And so the more compute that they can stand online, bring online, the faster their revenues will grow. And that goes back to the comment that I was saying, that inference is revenues, that compute equals revenues now in this new world. And in a lot of ways, that's the reason why We say it's a new industrial revolution. There are new factories, new infrastructure being built, and this new way of doing computing is not going to go back. And so, to the extent that we believe that producing tokens is going to be the future of computing, which I believe, and I think largely the industry believes, then we're going to be building out this capacity from this point forward and continue to expand from here. Now, the thing that is the wave that we're seeing now is the agentic AI inflection, and the next inflection beyond that is physical AI, where we take AI and these agentic systems into the physical applications, such as manufacturing, such as robotics. And so that's a giant opportunity ahead. Okay.
This concludes the question and answer session. I'll turn the call to Toshiya Hari.
In closing, please note Jensen will be participating in a fireside chat at the Morgan Stanley TMT conference in San Francisco on March 4th. He'll also be giving a keynote at GTC in San Jose on March 16th. Our earnings call to discuss the results of our first quarter of fiscal 2027 is scheduled for May 20th. Thank you for joining us today. Operator, please go ahead and close the call.
So what we're going to do now is going to wrap this up. Vaz is stayed live for me because he wants to tell you how the business that he's covering tonight is using AI and how they can be a customer of Nvidia. Let me tell you, I told you what I would do and I do what I say. I have bought 60 shares of Nvidia tonight live on the show, 11,808. 2.9% of my portfolio, sort of half what the S&P is. They're around about 7%. No, they're not. Yes, they are. There they are. And I'm just down 0.56, hardly down at all. In fact, a few seconds ago, I was up on that. I was buying down, doubling up each time as it stepped down $1, and now I'm just down $54. My average is 197.99. Very nice indeed, and I'll buy more if it goes low. I'll just keep doubling and doubling every time it drops. So stay where you are. I'm now going to hand you over to Vaz, who's waiting to greet you. He's going to talk to you how AI could play a part in what he's looking at, the next industry to take advantage of it. If you stay right where you are or click on that link, it will take you right there, right now. I will see you in a bit. Thank you very much indeed. Go and join Vaz. Go and say Martyn sent me. Then we'll see you back in the morning for the breakfast show with Sensei, followed by myself. Great night tonight. We learned, we didn't gamble, we didn't guess, we waited until we saw Nvidia pop. We found out why, we learned, and this is going to $250 to $300. I like it, so I've got a position in Nvidia. Great stuff. It was all shared on Discord and Electrum. Thank you for those that took advantage of the membership tonight of Discord and the newsletter. You all got 50% off. Join Vaz now. Say Martyn sent me. The link's in the chat. Click on it now. I'll see you there. I'll join you. Till next time, as always, take care of yourselves and each other. Thank you, Sensei, for joining me. Great job and great newsletter. Cheers, mate. Bye-bye, everybody.